There's one question on my mind recently. So is the Iran war a distraction from the Epstein files, or were the releases of the Epstein files meant as a distraction from the Iran war that was already prepared in the background? The longer I think about it, the less I know. But one thing I do know is the following. The longer this war goes on, there's one country being particularly hit hard. And I'm not talking about Iran, I'm talking about China. Hello and welcome to another video by HKCM Global. My name is Joe and I will not keep you waiting. What am I talking about? Why is China being hit hard by the Iran war? I'm telling you. So come with me here to this chart. What you can see here is the amount of oil that is being transported through the Strait of Hormuz. And as you probably are aware, the Strait of Hormuz is currently closed down due to the war. There is no ships going through, no direction. And first of all, it is particularly hard for the Gulf states because all of their trading imports come through the Strait of Hormuz. But then also, on the other hand, it is particularly bad for China because, as you can see here on this chart, most of the oil that is being transported through the Strait of Hormuz is headed towards Asia. And then again, inside of Asia, mainly towards China. And the amount of oil that is being transported to Europe, North America, and other destinations is absolutely marginal. So the longer this war drags on, and the longer the Strait of Hormuz is being closed down, the harder China is being hit. Because the United States, on the other hand, they first of all have oil supply from Venezuela and other sources, and also they themselves are a huge oil-producing nation. I believe by now they even are a net exporter of oil. Don't quote me on it, I need to research that. But I do believe in recent years they have become net positive in their oil consumption. So that's why I decided to give you a quick update on two of my most favorite companies outside of China. And both of them, of course, we analyze in our China Titans stock package, which I linked here down for you in the description. We analyze 200 markets on a daily basis. And in the China Titans package, it is the most profitable, most interesting companies outside of the Chinese market. For example, this gem here, JD. HKCM Global turns into HyperCM Global. We scan the markets daily, always on the lookout for the latest trends, focusing our attention on the most exciting stocks. That's why we're presenting our new Hype Stocks package. The Hype Stock package delivers analyses of 15 stocks from the hottest sectors right now. We're talking defense, quantum computing, biotech, space. We deliberately focus on stocks with an upside potential of at least 400%. And because trends move fast, this package doesn't stay static either. The selection is constantly updated. If a certain sector or stock loses momentum, it'll be replaced by a new one. This keeps everything dynamic and always relevant, enabling you to benefit from changing market trends. The stock package for current megatrends. Go to hkcmglobal.com now and get our new Hype Stocks package. And JD is particularly interesting for me currently because we have seen for JD here, this blue here is a long-term entry area that we place on the charts whenever we see a pivot that brings us a very rare entry opportunity into the markets. And so this target zone here, this entry area, has been put on a chart already back in 2023. So before all of this sell-off here occurred. And then we dipped inside this entry area. And first of all, we had a little rally outside of this entry area. So maybe let's just place here for starters and measure bottom to top. So roughly 40% of gains being made here. And then we fell again back into our entry area here. And then we saw another rally. And I'm not measuring from the absolute bottom here, but just from this middle area here where you would have had plenty of time to buy, many days of buying here, and just from these levels here up until the top, still another 88% of gains. So almost a 2x outside of our long-term entry area here. And what followed was admittingly a valley of sorrow. Yes, we have placed another short-term target zone here, which was again perfectly hit. We missed the target zone here, so no entry made and no money lost, and also no money gained. Yes, sure, both is true. But then we had a little hit of our target zone here, and we always recommend to our subscribers to enter a position already on the upper limit here of our target zone. First position here, and if you plan on investing more positions, then you of course can scale in as we hit the lower retracements of the target zone. But first entry should be made at the upper boundary of our target zone, and if we measure here from this upper boundary up until the top of the wave B here, again 46% of gains being made, and up until these levels where again you would have had plenty of time to sell, roughly 40%. Just shy of 40%. So even with this sell-off here, our customers should not have lost any money. And what we can see here is that currently we do expect a major pivot once again, because out of this wave 2 low here in blue in brackets, we continue with this count here in magenta. So a wave 1 was established back in May of 2024. We have seen a wave 2 low, then again in August of 2024, and what followed was this rally here leading into our wave 1 top. We have ever since seen an ABC correction that could already have come to a halt here, and we should be of course turning to the upside every minute now, because if this count wants to maintain its validity, it is crucial that we do not dip below this starting point of the wave 1 here, which sits at, I do not have the exact level, but sits at roughly $23.80, $23.70 roughly, because it is a concrete rule, an Elliott Wave theory, that a wave 2 retrace can never go beyond the starting point of the wave 1. And the starting point of the wave 1 is exactly this price level here at $23.70 roughly. So if we were to dip below here, this count then is invalidated and our alternative scenario becomes our primary count. So if you hold active positions in JD.com or plan on getting into JD.com, that's where a subscription to a daily market analysis service really would come in handy, because right now we do have a very solid risk to reward ratio, because there's only another 5% here to go up until we would hit this invalidation point, when on the flip side there's of course plenty of room to go up until the high of the wave 3 at roughly 180%. So amazing risk to reward here. A little risk to reward. But if you watch my videos regularly, you do know that I always try to sparkle in a little bit of macro as well. And if we then jump on the larger time frame, so this is here the 4-day chart for JD. We just came from the 8-hour chart, now moving over to the 4-day chart, because what is particularly interesting to me is the following. So currently, JD is trading at roughly $25 here, right? And we're trading it directly at the Nasdaq. So $25 here for JD.com. And these levels of $25, you can see it here. These levels have already been visited back in 2019, but not only then, but also back in 2016 and even all the way back to 2014. We have seen these levels already back in 2014, and we even saw higher prices than these levels, significantly higher prices, shall I say, in mid of 2014. And if we take a look at both earnings and revenue for JD.com here, back in 2014, we were talking about $18 billion of revenue against currently $180 billion in revenue. So 10x the revenue. And if we take a look at earnings here, back in 2014, losing money big time, now highly profitable. So the company JD.com right now is infinitely better than back in 2014, yet we are trading at the very same prices. So if you ask me, that is an opportunity. But as always, we are legally bound to tell you that this is not investment advice. This is just my opinion. Whatever you do with your money is completely up to you. And if we just make it a little wilder still from these current levels, up until our projection for the wave 1 top, this is the 180% that we just discussed. And for the long-term wave 3 top, we are already talking about 500% of gains being made. And this is then only if, I mean, look at this top back in 2021 here at $108. This then would only be roughly a 30% gain on top of the wave 1 top back in 2021. So if we take all of this into consideration, this 500% call here for JD, isn't that crazy? It's actually pretty conservative. But then second company I brought for you, a car manufacturer out of China. We all know him, we all love him. BYD, build your dreams. And boy, did they build dreams in recent years. I mean, coming back from a modest 11 Hong Kong dollars per share back in 2020. We have seen ever since a 10x, a 12x, shall I say, up until the top in April of 2025. And this then is one of these stocks that I told you about, where we have seen amazing gains over the course of the last 1 to 2 years. But now it has also been a little bit of a valley of sorrows. We had a short target zone here, also with a successful sell-off of 20%, but this was not the absolute top yet, so we kind of messed up here. No money lost, money earned here, but we did not catch the absolute top because the absolute top was established just a little higher at 159 Hong Kong dollars and 30, and we are currently on our way to meet yet another long-term entry zone here for JD. And sadly, this is one that is rather imminent, so I will not share the exact coordinates here with you or for free on YouTube. For this, you would need to be a subscriber. So this is a courtesy out of loyalty to our paying subscribers. I need to keep a little bit of information for them only. Same applies, for example, for Alibaba. I wanted to also share an analysis for Alibaba here, but sadly, we are right now revisiting our account for Alibaba. It has been done, but there is no update pushed out yet by the time I'm recording this video. So again, out of courtesy for our paying subscribers, I can only share those updates with you after they have received them. But similar story than here for BYD. I mean, the electrification of the car industry is coming. It is ongoing. It is rolling. There's no way of stopping it. We can, of course, discuss about the speed of it and of the sensibility of turning every single car around the world electric. We can do all that, but in general, the direction is clear. We're moving towards an electrified personal transportation future. That's just the way it is. So then, out of our long-term entry zone here, just roughly, give or take, also another 450, 500% of potential here for BYD. And if we want to take a look at the direct undercount, see here, we are right now in the development of the Wave X, and Wave X's usually are a bit simpler in structure than, for example, a Wave W or also as a Wave Y. And that's why we have seen here the top of the Wave Y back in May of 2025. Ever since, we have seen a pretty clear sell-off here. I mean, you can see there's no complex up and downs and dragging corrections and relief rallies here and there. It's a pretty clean sell-off here in the Wave W. So we expect now another counter move here in the Wave X. So again, should be a rather short one before we finally sell off here in our last leg Y down to meet the pivot point here for our Wave X that we have just discussed here on the weekly chart for BYD. And this should then take us all the way into our long-term entry zone with, again, the exact coordinates being shared to our paying subscribers. But this here is our very clear outlook for BYD and for JD.com. Hope that was helpful for you. See you in the next one. Take care.